An essential part of the business model is the ability to share risks with investors. To approach these sources of risk capital, the financial institution shall work with one or more funding providers or find an asset manager for the concept of risk sharing. A fund manager can launch a targeted open-ended or closed-ended investment fund to reduce the risk from the loan exposure for the financial institution. Such a funding provider will also provide advice on the proper structuring and the pricing of assets that are earmarked for selling. In this final chapter of the blog series on digital transformation and business strategy, we would like to introduce to you the concept of the SME Lending Fund, which we have developed over the past years. We are planning to launch, together with our own asset management subsidiary, Q-Lana Investment Advisors, this concept over the course of the next 12 months. My name is Christian Rumer and I am the CEO and founding partner of Kulana. We have developed a low-code-based open banking, digital lending and asset management platform. Our banking platform is used for multiple financial institutions in lower and middle income countries and by asset managers around the world. In our blog, we will share with you our expertise and ideas about how to organize financial services, how to develop a successful business model for the next decade, how to manage risks, and how to implement all these ideas and concepts at the right speed and sequence. Providing financial services for SMEs and corporates is among the most interesting and most challenging business area for traditional financial institutions. Financial services for SME clients require specific understanding of the way those companies conduct their business, entrepreneurs' personality, strengths and weaknesses. Providing financial services for SME clients is for the largest part a relationship banking. It can take several years to build the understanding of the client and the business potential. A good SME relationship manager in a financial institution has gained the trust of the entrepreneur and of the management of the company. The relationship manager fully understands the business of the client, the personality of the people involved. Successful financial institutions in the SME space build up this understanding and knowledge through a strong focus on the interaction with the client. Entrepreneurs, on the other hand, value both solid and modern financial services as well as a trustful relationship with their financial institution. They prefer to rely on a financial institution as long-term partners based on trust and understanding. The local presence and the proximity of the SME put local financial institutions in an advantageous position when it comes to monitoring and collecting of loans. The entire business strategy, which we have presented in this blog series, is based on the concept of customer centricity and the proprietary knowledge in the assessment and management of risks. Now, according to several studies, there is still a significant funding gap for these SMEs. If you follow the studies, for example, the one published by the IFC, this funding gap is in excess of $3 trillion for developing markets alone. Let us have a look at the challenges again. SME lending is difficult. At the one side, SMEs need a competent financial partner who helps them with funding and financial advisories. And the local banks have this knowledge about SME business and experience in relationship management. But these local banks don't have the risk capital. They lack the adequate source of funding because they have mostly short-term deposits and they lack the risk capital. This shortage of risk capital limits the appetite for larger and long-term funding. International investors are generally not present because they are unfamiliar with the local markets in developing countries. Some of them provide balance sheet lending for the local banks, but that still leaves the risk with the local bank. Direct lending initiatives happen specifically through funds, but they are very, very inefficient and usually fail during the monitoring and collection phase. Specifically, when we talk about SMEs, there are of course differences if we look at larger funds and larger transaction sizes where international standards are more common. Unlocking the funding gap for the SMEs is the key that we have to solve. So we like to unite the international knowledge and the investors with the local banks through the Kulana platform as an intelligent platform for asset management. The SME Lending Fund provides an attractive solution at low cost. It solves the challenge of the SME lending by combining the strength of the local bank and the investors. In this model, the financial institutions are the competent financing partners for the SMEs. They provide both funding and financial advisory. This leverages the in-depth knowledge about the SMEs that is accumulated by these local banks. The lack of risk capital of the local financial institutions is addressed through the risk-sharing mechanism through which the SME Lending Fund and ultimately the investors take the actual default risk in the underlying loans. This reduces the requirements for the local banks regarding regulatory capital and provides a solution for the gap in term funding. By collecting the funds from international and domestic investors and investing them in loan participations originated by the local financial institutions, the investors actually have direct access to the credit risk while leaving the origination, monitoring to the local institution. And by engaging in a risk-sharing mechanism through arrangements like silent participations, the interest in monitoring the loan and collecting outstanding amounts is aligned between the financial institution and the investor. On the slide, you can see a general structure of the SME Lending Fund. You see the various participants, and please note that this is just a sample structure that we have prepared to show you the various parties that play a role in the SME Lending Fund. On the left side, you have the investment partners, which are the financial institutions who are responsible for originating and generating the assets, meaning they do the lending to the local SMEs. We might engage with local partners or guarantors, such as lending platforms, to also generate assets. On the bottom, you see the investors. These could be commercial investors who have an interest in a market yield. We could also think about structured funds to combine a more impact-oriented equity investor together with market-oriented senior investors. We have a fund manager who is responsible for managing the fund, and we talk about other partners who are looking at measuring ESG and impact to ensure certain transparency around the assets. The SME Lending Fund then has the assets, which are the loans. They could be in local or hard currencies. The exact amounts have to be defined on a fund-by-fund basis. And this SME Lending Fund funds itself through the investments from the investors. These could be single tranche funds, straightforward, or they could be structures, for example, blended structures if we talk about more impact-oriented investment opportunities. At the bottom, you see the Kulana platform, which provides the basis for this fund by managing all the assets, monitoring the assets, and engaging with the institutions who originate, rate, and monitor the assets on an ongoing basis. As I mentioned before, this is just a general structure of the fund. We could look at more simpler versions over time. We see this as an excellent way to unlock the funding gap. At Q-Lana, we're putting these pieces together to launch this fund over the next 12 months. This brings us to the end of our blog series about digital transformation and business strategy. We have started with a couple of trainings on the topic of digital transformation and then explained to you the ways how, for example, a business strategy could evolve around customer centricity and risk management. We have provided you various details and explained to you how we at Q-Lana are eager to work with your financial institution to make these business strategies and digital transformation reality. Thank you very much for your attention. Thank you very much for listening through this blog series. We hope that it was useful and you learned something about the various topics. We look forward to be in contact and wish you a great time. Thank you and goodbye.